Hello, I'm Michael Pascoe. It's Monday, September 9, the start of a new week and a new federal government with some interesting statistics and surveys around that might indicate what sort of honeymoon Tony Abbott will enjoy as PM. The earliest news of the week, China's trade numbers, is already favourable. On the other hand, there is the likelihood of a particularly ratty Senate with some oddball parties winning the preferences lotto. I think it was aptly summed up by Paul Keating a couple of decades ago. Unrepresentative swill. But the new Senate doesn't sit for 9 months, so while that's gestating, let's start with the good news. And it continues to come out of China. As suggested last week, after 3 years of talking down the economy, Abbott and Hockey might well be lucky with the economic cycle turning. Beijing yesterday released August trade numbers which showed exports surprising on the upside, while imports surprised on the downside, leaving the monthly trade surplus to jump 8.3% from the same period last year to $28.6 billion US, 40% more than a Reuters survey was predicting. The 7.2% rise in exports is the global good news, a sign of renewed demand elsewhere in the world for the stuff China makes. The 7% fall in imports might be seen anywhere except Australia as not so good, but we know that our key exports to China were up. Port Hedland iron ore shipments ahead by 33%. And the good Chinese news is tipped to keep coming, with inflation today likely to be down a bit, while industrial production and retail sales tomorrow should be stronger. It's all part of the continuing story of Chinese growth stabilising around the strong and healthy target of 7.5%, while the cadres try to engineer their transition to greater consumption. And that continues to provide a cushion for our economy as we undergo our own transition away from reliance on the resources boom construction phase. Which segues into today's ABS July housing finance numbers that should show investors and existing owner-occupiers seeking more money to put into bricks and mortar. They'll be doing very well if they can continue the new loans momentum displayed in APRA's June quarter stats. This is the monthly confidence week as well. The NAB Business Survey tomorrow and the Westpac Melbourne Institute Consumer Confidence Index on Wednesday. Both were taken when the polls were clearly showing a coalition win. It'll be interesting to see if that's a precursor to a further rise now that it's happened. The biggest domestic statistic for the week, though, is on Thursday, the August labour market figures. This is the one area where more than good luck is required. As usual, the market tipsters have no real idea. I've seen one report that the consensus prediction is for 12,000 new jobs and unemployment to remain steady on 5.7%, so that probably won't happen. Even with some good fortune, it will take a while for employment growth to catch up to the working age population growth rate of 1.8%, so the unemployment rate will continue to tick up. There is good news on the labour front, though, from a business perspective. The June quarter national accounts showed unit labour costs are falling and productivity is rising. Not that you would have heard that amongst all the negative talk. Finally, Myer is due to report its annual results on Thursday, after last week's ABS data showed department stores made up the weakest of the 6 categories of retail sales. It's a fair bet that Myer's fourth quarter won't be a happy story. But it could be worse. It could be Australian sport, after the Wallabies and Socceroos were both thrashed over the weekend. Just as well we're the world champion economy then, eh? Talk to you Friday.